In this video, we're going to be looking at a small growth company called Semler Scientific, SMLR, and ask the question, is this a potential multi-bagger investment for your portfolio? Hey there, and welcome to my channel, The Paper Bag Investor, where we try and find the next multi-bagger investment for your portfolio. I've been investing since about 2009 with a 30% compound annual growth rate. And to be clear, nothing on this channel is personal financial advice, but I want to open your eyes that there are great investments out there in the market, and you can do exceptionally better than just your average status quo returns. So hit that subscribe button down below if that interests you, and make sure you stick around through this video as we discuss a small company called Semler Scientific. So Semler Scientific is a small cap growth stock, a potential multi-bagger. Stock ticker is SMLR. In this video, we're going to talk about Semler Scientific, who they are and what problem do they solve. What's their fundamental business that they provide. What the stock has done so far, growth potential ahead, risks I see with this company, and stick around till the end of the video as I will share exactly my plan for Semler with you guys. So what problem does Semler solve? They make testing of peripheral artery disease, PAD, faster, cheaper, and easier. And they do that with the QuantaFlo product, which is their main product that they have. So what is PAD? Basically, it's blockages of arteries by fat growth. So as you get older and you haven't lived as healthy a life as maybe you should have, fat blocks up or collects or builds up in your arteries. It's very dangerous, and it increases risk of heart attack or stroke by 21%. And 75% of PAD patients are asymptomatic. So you could have PAD, and very likely you wouldn't even know you had PAD until there's kind of a major existential risk like a heart attack or stroke. And 1 in 5 people over 60 have PAD. This is probably a US stat. Whether they know it or not, 1 in 5 people do have it. So what is the opportunity in the market? Many people who have PAD don't know it. Over half are undiagnosed. So better testing, if you could make easier, faster, more frequent testing, would allow more people to be diagnosed early and essentially make lifestyle changes before a major event occurs like a heart attack or a stroke. So Semler, here's their solution, and it's called QuantaFlo. Here's kind of what it looks like. It's a testing procedure for PAD where you clip on something on your toe and your finger and you plug it into a computer. It takes a few minutes here. So yeah, it's proprietary testing equipment and software that tests for PAD in 5 minutes. So you plug this on your hand and foot, and then test it into a computer. Gets your results in 5 minutes. It's cheaper, it's faster, it's easier, and it's more accurate than the traditional test. It's easy to do in the home of the patient, so a nurse could come to your house and do the test for you there, or they could quickly do it at the doctor's office. Just a nurse or somebody, or the doctor, whoever, could just plug in and do this test for you in 5 minutes. It's FDA approved and it's patented. So all very, very good things. Now the traditional testing method is called... I learned all kinds of interesting medical things this past week. Traditional testing method, the ankle brachial test, the ABI test, we'll call it. It is a standard test for decades. It uses blood pressure cuffs and a Doppler ultrasound imaging. So you have like a cuff on your arm and your ankle. Again, you do this on each leg and each arm. And then with like an ultrasound imager, you amplify the signals as you increase the pressure of the cuff. Something like that. And then you take some kind of a ratio between the two. It tells you something. Okay, so then it requires a vascular technician to perform the test. I don't know if that's really true, but somebody obviously needs to know what they're doing with the test, and obviously a vascular technician would be trained in this. It's often done in a specialty office requiring a special trip or appointment. Now, my understanding is this kind of test, it's often, maybe your doctor thinks you should be tested for PAD, then they're going to have to send you to another separate office, and you make a separate appointment, take more time out of your day on another day, special trip, go somewhere and do the test at that office. So it's definitely some, if that's true, and that's my understanding that that's true, is definitely some major friction there just to do a simple test that very well could be meaningless for you, but could also be life-saving. And in Semler's investor presentation, they make it sound really hard to do this ABI test. At least that's the way they portray it in their investor presentation. I'm wondering, is that really true? So I watched a video demonstration of this ABI test. We're going to take a look at that really briefly right here. Pop this open. This guy does a test in about 7-minute long video where he explains some things. It doesn't show everything about the test, but you can watch through it. I'll put this down below in the description, where he shows this ultrasound monitor goes on the patient. You increase the pressure, etc., etc. He calls it actually, in the description here, a simple test. So I think this is a pretty standard, fairly relatively simple test to do. But again, if it involves you have to make a special trip to a special office, and now this QuantaFlow product by Semler could mean, rather than doing all that, a doctor could quickly test you in a few minutes right on the spot at their own office. To me, that's very encouraging. Though again, it looks like a straightforward test if you knew what you're doing and have the right equipment. But I also found a great clip by this guy named Dr. John B. Long, a vascular surgeon, and he's sort of endorsing QuantaFlow. So let's watch that clip as well.
The other beauty of QuantaFlow is that, unlike the standard arterial Dopplers, the equipment you need is much simpler. The training to perform the test is much simpler. It can be done in a regular room. You don't need a special ultrasound room. So it lends itself well to a busy clinical practice with a wide range of patients who certainly would have risk factors for atherosclerotic disease.
So again, this kind of helps give some clarity, maybe as an investor, that here's someone qualified saying this really is an important tool and makes the testing process quite a bit simpler, easier, and with less friction. And in my opinion, for a preventative test that could easily be ignored or not done out of inconvenience, the doctor kind of hesitates to send you to another specialist, or maybe you hesitate to even take the appointment or go do the test at another, a vascular technician's office. If you can make the testing process as simple as possible, it's really important for widespread testing of something like this that's really could be a very well useless test, but also could be a life-saving test. Removing that friction as much as possible could be, I think, really important to actually see large numbers of people tested, and then actually seeing, hey, you have PAD, you should make lifestyle changes, you should have a healthier diet, you should exercise more. Otherwise, you have a good chance of having a stroke or a heart attack. So you might be wondering, okay, cool, so what has the stock done so far? So here's the stock. Just a few years ago, it was down at like $8 a share 2.5 or 3 years ago. And now over that time, it's gone a 1,300% increase up to about $108 a share, around there. They are a profitable company. We're going to be talking a little bit more about their financials, but they have a PE of about 53 and a market cap of $730 million. And now we get into some of their financials. Their revenues, they have been growing. For the last few years, these are yearly amounts. It went from 21 to 38 million. Last year, they talk about in their shareholder letter how 2020 COVID, they believe, negatively affected a lot of their sales, as people just couldn't get out of their house to go get tests done. And the revenues this first quarter of this year were 13 million. So again, growing rapidly there. Operating income is growing, net income is growing, and cash on their balance sheet, they have about $26 million, and that amount is growing. And then cost of revenues, which are around that, last year was only 9%, this first quarter 12%. So your gross margins of somewhere around 90%. So phenomenal gross margins. And we might be wondering, okay, how do they actually make their money? Yeah, okay, so how do they make their money? It's software as a service instead of just hardware and done. So a lot of people make a lot of companies that might make testing equipment like this. They might make the equipment very expensive up front. You buy the equipment and then you're done. That's the whole sale, whole transaction, whole sort of customer life right there. But what Semler's doing is they're making the hardware relatively inexpensive to get up front, and then the software, either paying for software on a per test basis or kind of a all-in subscription basis per month. They're creating a recurring revenue and creating this software as a service. So I really like this because it could bring in, I think, more revenue and more income over time, but it also makes it really easy and non-committal for a doctor or an office to bring in this equipment and try it out. How do they make money? Two types of recurring revenue depending on the customer type. So they can either have a fixed fee and do as many tests as you want, or a monthly variable fee where you play, based on the amount of usage. So if you do more tests, you're going to pay more. And Semler sells to insurance companies and large healthcare providers. They do not sell direct to the customers. So the next question you might have is, what is the growth potential ahead? So growth potential for Semler's QuantaFlo. This is from their investor presentation. They said they would believe there are about 80 million US patients who could be tested. And of that, which 20 million may have PAD, but only 1 or 2 million are estimated to be diagnosed conventionally. My question is really, if I really want to know how many people are tested for PAD per year currently in the US, at least in that market. This number I couldn't find, but I think I can very roughly estimate from this above statistic. So if you say, if there's 20 million out of 80 million that should be tested, there's sort of 20 million that would have PAD out of 80 million that are at risk for PAD, then they're undiagnosed and untested, but 2 million have been found. So this is a sort of a 25% ratio here. And if 2 million have been found, that means roughly maybe 8 million tests have been done to find those 2 million patients that do have PAD, roughly above that 25%. So maybe 8 million have been administered. And if you say the range of testing has sort of been over their life, the period of life where they're at risk for PAD, I'm going to say maybe that's a 20-year chunk of time that the average sort of this 80 million encapsulates a 20-year time span. Then if you take 28 million and you say, there are 8 million tests over 20 years, you do that math, it means there's maybe like 400,000 people being tested a year. I mean, this could be off by like a factor, like this could be, 800,000 or 1.2 million or 2 million maybe tests a year, or it could be even less than 400,000. But either way, I think it shows there's tremendous growth ahead if you really wanted to test more like 80 million people every maybe few years. So if rather all 80 million people at risk were tested maybe every 5 years, it would mean 16 million tests given per year. So if you take the 400,000 and 16 million, that's a 40x increase in testing. Again, these are rough estimates, but to me it shows there's like a tremendous amount of more testing that could be done so that people that do have PAD or are at risk for PAD can know that they have PAD, and then if they want to make lifestyle changes, they can make lifestyle changes. And of course, this 400,000 tests per year, that most of those are probably done by that API test and not done by the QuantaFlo method. So there's phenomenal potential growth ahead for Semler and their QuantaFlo product, I would assume, in the US alone, let alone other markets around the world. So let's look at a Google Sheet projection I did for Semler. This is rough napkin math, but we're going to jump into this, and I'll also link this down below. So again, this is really rough napkin math, but I plugged in the revenue for the last few years for Semler and their year-over-year growth for that revenue. And then I projected out year-over-year growth. So the green shows our projected numbers, the white were actual recorded numbers. You get your first your year-over-year growth, and then I projected that down until the year 2030. And I have gross earnings I've assumed are going to be 88%. So you take out your cost of the product, and you have mass amounts of gross earnings. So those are growing forward as well. And then you take your market cap in just a few days ago in 2021 was 740 million. And then your market cap to gross earnings for the year ahead. So next year, say they make 65 million, and you take that ratio of 65 million divided by 740, divided by 65 million, you get about 11.4. It's kind of like a PE ratio, but rather than actual earnings, we're just going to look at gross earnings because this is really simple way to at least have some napkin math of what the potential future value of Semler could be. I also want to mention the reason I'm taking the next year ahead in this ratio, because it's such a high growing stock, because the revenues are growing 35-40% per year. I'm kind of shifting today's value relative to next year's value. How is the market valuating that? And they're giving it about 11.4 ratio right now. So then going forward a few years from now, by mid 2023, in theory their market cap could be, if by 2023 they do say $101 million in sales and they have 89 million gross profit, and say they give a 10x ratio. So instead of 11, they give a 10x ratio by that time. You'd have a market cap of about $1.2 billion. And if you do the math, from $740 million to $1.2 billion in 2 years is just under a 30% yearly return. So phenomenal looking investment, potentially, if they can keep growing over the next couple years. And then if we span this out even further by 2030, if they keep growing at like 35% growth rate, they could be like $850 million in revenue, $750 million in gross earnings. And again, you stay at you could grow potentially maybe that 29-30% rate if they're 2030 by 2030. This time I did 2030 by 2030 because it's further out into the future. It'll be a little more stable company. Your market cap to gross earnings is 10 again. You have a 29% growth compound annual growth rate. I don't want to overwhelm you with these numbers, but I will put a link to this spreadsheet down below in the description so you can play with them yourselves. Other growth drivers for Semler is that they are working on other medical devices to evaluate and help chronic diseases. Their mission really is to develop, manufacture, and market innovative proprietary products and services that assist our customers in evaluating and treating chronic diseases. So you might be thinking, shut up and take my money already, but I want to say, hold up, there are risks with Semler that we want to discuss. And if you haven't subscribed already, hit that subscribe button down below and also that thumbs up. Really appreciate it. And you'll get more value and more videos like this looking to potential multi-baggers for your portfolio. So make sure you do that. Risks with Semler that I see, it's concentration of revenue. There's really just one product, which is good because you can focus in. And if that product really is phenomenal, you're really only investing in one, you're concentrating your money in one phenomenal thing. But if it's bad or compromised in some place in the market, or competition comes and erodes it, it can be very, very bad for your investment. So good and bad, I would say, but obviously there's some risk there of high volatility with something like that. Competition, of course, may come in the space. Other risk is that concentration of customers. They're really two of their biggest customers account for 70% of the revenue because they sell mostly to insurance providers. And so if these customers walked away or decided were in some way unhappy, it could be disastrous. I mean, like they could pull a plug and the stock could drop in half. You could lose 50% overnight kind of thing on that kind of a news or a small company like this. It's a small company and a loss of a key person could hurt. It also trades on the over-the-counter market, which by its nature, because there's smaller stocks you're dealing with, you could have a higher volatility there. Also, growth stocks in general could contract and from larger market conditions. We've seen that, this in February, last few months, growth stocks and tech stocks really shrunk. So a stock like this that's a little more speculative, future looking, has a 50 PE ratio, it could definitely be impacted for moves like that. Insider selling has been very common of late. The CEO has been selling through what's called a 10b5-1 plan. It's a pre-established plan, but others are selling as well. I'll put this link down below in the description so you can actually see the reports of who's selling and why. But there are people who have been selling recently as the stock has really performed excellent over the last few years. But it is encouraging to see that at least the CEO is selling through his pre-established plan and is not just triggering all the sells himself. So finally, you're probably wondering, Bagman, what are you doing with Semler SMLR? What are you doing, man? Not investing advice, but I'll tell you my thoughts on what I'm doing with this company. So my plan for Semler this week is I plan to buy a small position, less than 1% I'm talking, of my portfolio in Semler as what I would call kind of an exploratory position. Gets my foot in the door, helps me monitor the stock even more closely, and I plan to hold and monitor the company, and I plan to increase my understanding of their product dominance or lack of dominance, because to me this is the key thing. You're investing really in this QuantaFlo product. If this is just phenomenally guarded in terms of the patent that they have, is this just a much better testing procedure in all ways than the other current tests that people do? If it's much better, then this could be a phenomenal investment. Okay, so I'm going to be looking and learning more in these areas, but I'm only going to be sort of committing right now because I'm not sure, a very small position. If I like what I see and or the price drops for some non-business reason, so the market contracts or the market overreacts to negative news on Semler, I may add more. So especially if I'm liking that I really feel they have dominance, I'll probably add more. And or if the market contracts for some reason or the stock drops for some reason on some kind of news that's really non-substantial, then I'll be really looking to add more. If I add more or double down, I will let you know. So make sure to hit that subscribe button to follow along for those future updates on Semler. So make sure you hit that subscribe, hit the thumbs up where you're at it. And thank you guys so much for watching and supporting the channel. And remember, it's in the bag.